Give me your idea of where the euro's going to go and how the data's going to back it up.
I think ultimately the data remains relatively robust. If you look at our growth forecasts, we've recently revised up our euro area growth forecast. So the growth picture looks relatively decent. I think as far as the euro concerned and the ECB concerned, it's still the age-old question of whether inflationary pressures can remain underpinned. We think not. We think the inflation rate will peak at 1.5 this year and then slow down to 1.0 next year. And hence we have a relatively protracted period of normalization of policy as far as the ECB is concerned. Now, how that plays into the euro, again, a lot of this move, as you quite rightly pointed out, has been euro appreciation rather than necessarily dollar underperformance. And if the ECB starts to highlight its concerns about FX strength playing into weaker inflation, that could be the catalyst for this move back towards our forecast towards the end of the year.
Well, and the big question is when that's going to wind up eating into equity markets. I mean, really, euro stocks have been rolling over in the last few weeks, hasn't really kept up with the global rally as the euro has climbed. Where do you see that dynamic really turning?
Well, ultimately, you know, one of the key themes that we've heard from investors over the course of the year has been this inflow of equity inflows into European equity markets, a rotation out of the US. Again, I think we're now with the market approaching, we're expecting some kind of normalization. Obviously, when equity markets start to hear the word tightening, that generally tends to take the froth off them. But as long as growth is underpinned, I think again. That should keep equity performance relatively underpinned.